Hello and good afternoon, everyone. My name is Snigdha, and I'm a postdoctoral associate at Yale. I started there about 8 or 9 months ago, and my research focuses on helping people with employment, helping people with substance use disorders in their employment. I'm going to be looking at what are some barriers to recovery that people face in terms of employment. So today I'm going to be talking about the financial impact of transitioning from disability benefits and what are some challenges to work and recovery. So for the presentation, we're just gonna start off with an overview of the problem, what's going on, what are some issues that people are facing, and then we're gonna talk about what are some general barriers to employment that people with psychiatric disabilities face, and then we'll talk about financial barriers and what are some recommendations. So, serious mental illness is defined as a mental, behavioral, or emotional disorder which usually causes functional impairment and it substantially interferes or limits one or more major life activities. So, when we say serious mental illness, I know diagnosis doesn't matter, but we usually are talking about like schizophrenia, bipolar disorder, anxiety, or major depression or any mental health condition which results in severe functional impairment and interferes with a person's quality of life. So this graph here shows the past year prevalence, or it's from 2022, but the prevalence of serious mental illness among US adults. So in 2022, there were about 15.4 million adults aged 18 years or older in the US with serious mental illness, and this represents about 6% of all US adults. And the observed prevalence of serious mental illness was higher, as you can see, among females than males. Young adults between the ages of 18 to 25 had the highest prevalence, which is about 11.6%, compared to adults aged 26 to 49, the prevalence is 7.6, and age 50 and older, the prevalence was 3%. And the prevalence of serious mental illness was highest among adults who were reporting two or more races. So as I said, this data is from 2022. So most people with serious mental illness are likely to fall into the classification of having a psychiatric disability. So, according to the 1973 Rehab Act, a disability is defined as any person who has a physical or mental impairment which substantially limits one or more of such person's major life activities, has a record of such impairment, or is regarded as having such an impairment. So, among people with serious mental illness, the unemployment and poverty rates are very high among people with psychiatric disabilities. About 65 to 70% of people with psychiatric disability want to work, but only about 15% of them are employed. And for people in general, not just people with psychiatric disabilities, but work serves many goals. So, employment plays a critical role in not only satisfying core survival needs through financial security, but also in satisfying other basic human needs that are fundamental to mental health and well being. So, work provides a structure to the day, it provides a place to be, tasks to do, which can sometimes help people manage their psychiatric symptoms. And work may also kind of be a support system for people where their coworkers may evolve into friends. And work is, of course, a foundation for a living wage and health benefits. And it's for a lot of people, work can be an important part of their identity. Even if you think about social exchanges, when you meet someone new, a lot of people start off by asking, like, what do you do for work? So, work is very important in people's lives and also, of course, for people with psychiatric disabilities. And in terms of, people with psychiatric disabilities, even those who are employed, they earn less and are less likely to work full time and face greater job insecurity and have less advancement opportunities than those without disabilities. And even those who are working, they often work in sectors where they're paid low wages, or they have low job security, or unpredictable hours. And a lot of these issues that people with psychiatric disabilities face, it's even worse for people who have co-occurring substance use disorders. And the labor participation rate for people with disabilities has worsened during the pandemic, although now it's getting better. So, in terms of poverty, approximately 3.5 million people with psychiatric disability rely on SSDI and or SSI. So, people whose illness prevents them from working and is expected to do so for at least a year are eligible for SSDI if they have a work history, or if they don't have a work history, then they can rely on SSI. And to qualify for SSI or SSDI, a person must be unable to engage in any substantial gainful activity by any reason of any medically determinable physical or mental health impairment, which basically causes them to be unable to work. So the proportion of people receiving SSDI or SSI due to psychiatric disability has substantially increased in the last 4 decades. And approximately 1 in 3 people with serious mental illness live in poverty. And the depth of poverty, or the extent to which they fall below the poverty line, is 52% higher for people who have a family member with serious mental illness than for families that don't have a person with serious mental illness. Even if we include SNAP as income, SSI recipients still live below the federal poverty line. And it's, even if they're waiting to get their SSI and SSDI, they may be eligible for some support, but it's not enough. So these are the 2025 SSDI and SSI amounts on a federal level. So you can see the difference between the average amount that people get every month versus the maximum amount that they can get. So the average monthly SSDI payment is about $1,700, 1,750, and the maximum amount that they can get is 4,000. So there's a big difference there. And in terms of SSI, the average monthly SSI payment is about 717, and the maximum amount that people can get is 967. And this is important because over 2/3 of people with psychiatric disabilities are almost entirely dependent on Social Security programs for their income, and they make up about 1/3 of SSI beneficiaries and 1/5 of SSDI beneficiaries in 2021. So in terms of financial difficulties that people with serious mental illness face, so we don't really know a lot about specifically about people with serious mental illness and their financial difficulties, but we do know something about people with disabilities in general, and just looking at their experience may give us some indication of what it's like for people with serious mental illness. So people with disabilities have an unbanked rate of 18% compared to the national rate of 7%. And even when we control for things like income, education, employment status, race, and age, 1/3 of the gap in unbanked rates between households with and without disabilities is related to a person's disability. And historically, people with serious mental illness, they have mistrust in the government and systems in general, but also mistrust in banks. And either they might have been mistreated, they don't understand a lot of about the banking system, and so that can definitely be a barrier. And also, a lot of people with serious mental illness or people with disabilities may rely on alternative financial services like check cashing, money orders, or prepaid cards. So many years ago, the Social Security Administration, they discontinued paper checks, and instead of paying disability benefits either through a direct deposit or bank account, through a direct deposit or bank account or on a prepaid card. But some of these cards still have fees associated with them, which can be difficult for people to access. And a lot of people, if they don't have bank accounts too, it can be difficult for them to access the funds that they need. And they would rather choose other methods than go and open a bank account. Also, there's limited. They may have limited capacity to manage finances because people with serious mental illness may be more likely to overspend. They may have trouble keeping up with the bills. They may incur debt due to reduced impulse control, memory, communication, planning, and because of poor decision making skills. I don't know if some of you have seen the movie Mr. Jones, I think, where he has bipolar disorder, and they show that in one of his like episodes, he goes around spending money, and so sometimes that can obviously pose challenges for people with serious mental illness. And some people may also have specific cognitive limitations that affect their ability to manage money or even understand the different financial options that are available to them. And this can result in them being vulnerable to scams and exploitations. And given, all these difficulties, some people may be determined incapable of managing their funds, so they may voluntarily give up control to someone else. So they might assign like a representative payee to take care of their finances, and the payee would receive their benefit payments, pay their rent and bills, and then give the remaining funds to the person or however the payee deems appropriate. But this relationship between a payee and the person, it can cause a lot of tension. It can damage important relationships, especially if the payee is like a family member or a close friend or they play a role in their treatment. And having a payee can also increase the person's dependence, limiting the person's ability to take control of their own finances. And sometimes, payees can also have their own financial difficulties because there's no adequate supervision in the payee program. Individuals or institutional payees can also deliberately misuse the funds. So, given all these issues, people with serious mental illness struggle to maintain control of their finances, and most often they don't have a lot of options for support. And while mental health care providers typically they don't really have much to offer beyond helping them get their benefits or subsidized housing or transportation, food, or support employment services, and they might be able to work individually with their clients on finances, but most of them are not really trained to provide the kind of comprehensive and holistic support that people might need. So, given all these issues, what is the impact for people with serious mental illness? So, living on a low income adds to the difficulties that people with psychiatric disability face, and it also creates barriers to recovery. So, there's a strong relationship between poverty and mental illness. And while we can't really make any conclusions about causality, we do know that poverty imposes certain barriers to recovery from mental illness, regardless of which one caused the other. And other than having like negative financial consequences, unemployment and poverty can negatively affect the well-being of the individual, community involvement, and people who are employed experience better like self-esteem and quality of life. But that's obviously not available for people with psychiatric disabilities because of the difficulties they face. And being unemployed can also increase the risk for substance use and elevated rates of physical health problems. And it's also associated with greater rates of depression and anxiety. So, what are some barriers to employment? So, we're first going to talk about some general barriers and then talk specifically about what are some financial barriers. So, in terms of general barriers, limited work histories, skills, and low confidence, difficulty dealing with illness symptoms at work, and stigma can be barriers to successful employment. So, people with psychiatric disabilities, they may have low self esteem and low self efficacy. So they may believe that they cannot work. Even if they want to work, they might feel like they can't work. And in fact, one study estimated that about 40% of people who have a disability, or who have a psychiatric disability, believe they can't work. And even if the person believes that they can work, concerns among their family members or their service providers about, work is very stressful, work can cause a relapse, can result in a lack of support for their employment goals. And stigma can also make workplaces unwelcoming and result in self stigma, which damages self esteem and self efficacy. So, we all know that employees with a disability are legally entitled to accommodations in a business. And but what happens in a lot of cases is that employers and employees don't always know enough about accommodations. And so people aren't able to access the accommodations they need. And also, there's the issue of disclosure. People who have psychiatric disabilities, they might be hesitant to disclose their illness because they might be unsure how the person is going to react. They don't want to face any negative attitude. So that can deter them from getting a job because they're like, I don't want to disclose, so I'm just not going to apply for a job. There's also the broader economic conditions that affect employment opportunities. So, like I said in the beginning, people with psychiatric disabilities who receive benefits and work, they mostly work jobs that give them low wages. There's low job security and unpredictable hours. And this is probably because some of these jobs are easier to get. You don't need as many, whether it's educational qualifications or work history. They might not look at too much of that, and they might be easier to get. So that's why a lot of people with psychiatric disabilities might tend to work these kind of jobs. But also, there's in the past couple of years, the job market has become more volatile, and wages have become somewhat stagnant, which has been exacerbated by COVID-19. So that can also be a barrier for employment. There's also asset and income earning limits. So while disability benefits are an important source of financial support for people who cannot work, receiving those benefits can dissuade them from wanting to work. So most people who receive SSDI or SSI, they rarely become independent from those income sources. In fact, only about 4% of SSI recipients are working, although a lot more of them express a desire to work, and many of them might even work part time. So these low employment rates are caused partly by disincentives, where a person, so also to be eligible for SSDI or SSI, sometimes a person has to prove their inability to work for an extended period of time before they can be eligible. So the longer they have to wait for this thing to be approved, the less likely they are to want to work in the later years. And also, people receiving benefits, they may lose them should they return to work or if they accumulate assets. So, people receiving SSDI can work and earn up to a certain amount without losing their benefits. But once they exceed that amount, then they lose their benefits. And in case of people who get SSI, the limits are more stringent. And sometimes they can lose their SSI eligibility if they have like resources above $2,000. But there are some exceptions, like, the home they live in, or vehicle, or life insurance policy. But these income and asset limits can be particularly challenging for people who receive SSDI and SSI because they might not really know enough about these, and they also might be afraid that if they start working, they're going to lose some of these benefits that they have. And there's the ABLE program, which is I think it came out in 2014, the ABLE Act, which allows people with disabilities to save a certain amount of money in special accounts without affecting their asset limits. But there are certain drawbacks of these accounts as well. Like, there are sometimes some of these accounts have fees associated with them, and it's like $2 or $5. And while some of these amounts might be insignificant for those who save consistently, it can certainly be discouraging for people who only save small amounts. Also, in some states, the ABLE funds are taken, or if the person dies, the ABLE funds are taken over by the state. And so this can also be a burden for family members of the person with the disability who might have these accounts. So now we're going to talk about what are some financial barriers to employment. So first of all, there's the loss of income-based subsidies, like we were talking about. Many of the disability benefits, like SSI, SSDI, but also subsidies for like rent, energy, or food assistance, or health insurance. All of these if a person income increases, they might lose out on some of these supports, and they might have trouble like managing all their finances, budgeting how to cover all these different things. And health insurance has improved in some states, but still there's a lot of confusion about the eligibility and what are the steps that people have to go through to retain coverage even after they start earning income. And then there's tax implications. So usually SSI recipients, they don't pay taxes, which changes if they start working. So once they're employed, if they receive employment income, then they have to start paying taxes. And a lot of people who are unused to filing taxes, they don't know how to file taxes. They may be uncertain about their tax obligations when they start earning. And because they don't know how to do it, or they might not know that they have to do it, they can start owing money to IRS. And the cost of filing taxes also may dissuade them from seeking expert assistance. So while there are programs like the Volunteer Income Tax Assistance Program for people who are income eligible, the services may not be available in all the areas, and also people might not be aware that they have this option to use these services to file their taxes. And when a person's income increases, they may also be vulnerable to taking on new debt. So, along the recovery journey, if a person's income increases, they may start taking on responsibilities like, renting an apartment, purchasing furniture, buying a car, supporting or sharing resources, buying gifts for family members. All of this can be like a sign of their recovery, but they may be some people may face pressure from family members to like share the resources challenges with them. And also, as the financial demands increased, people might be offered credit cards or personal loans to meet some of these demands. And as their income increases, their opportunity to go into debt also increases. And, the debt industry is like good at identifying people with disposable income or people who are susceptible to borrowing. And people with disabilities are much more likely to have debt from like car lenders or other places. So a person also who becomes employed after like being unemployed for a while, they may quickly accumulate debt, which can be a barrier to employment as well. Then there's difficulties due to losing disability benefits. So, overpayments arise when a person is paid more benefits than they are entitled to, given their income or assets during a particular time period. And because of that, if they're paid more than they're entitled to, then they have to repay the Social Security Administration. So, two-thirds of SSDI recipients who work and earn enough such that they're no longer eligible for benefits were overpaid at some point, and the average overpayment amount is about $7,000. And the fear that people might find themselves in this situation may dissuade people from seeking employment. So there was the researchers did a qualitative study with 84 SSDI recipients who had experienced an overpayment, and they found that nearly that over half of them immediately terminated employment after they found out that they were overpaid and that they have to pay this money back. And in Connecticut, research has found that the lack of certainty about if and when benefits may be reduced and this risk of overpayment was a significant barrier to employment. And loss of financial management supports and options. So, we were talking about payees. So, just over 10% of SSDI beneficiaries have their income managed by a payee, and this number is higher for people with a psychiatric disability. So, any employment income that the person gets is their own, so that the payee has no authority over their employment income and only the Social Security income. So if the person wants help managing their employment income, they may have to like seek a power of attorney or a conservator, but these can be complex, they can be costly, and they can also be like overly restrictive. So there are really no like money management support options available for people who struggle financially, but they're not exactly incapable, but they just want someone to like support them. And their needs also might fluctuate over time, and they might need help with different aspects of financial management, and there's really no one to like help them or guide them through that process. And people who become employed may have to open a bank account either because, they might not have a payee anymore, or it most likely the employer is going to want a bank account to put their salary in the account. And opening a bank account also, there's a lot of fees associated with it, and people who have not had bank accounts can find it difficult and confusing on how to manage the account properly. And also overdraft and other fees are common for people who earn a low income. And also, when a person who has been on disability benefits begins to receive employment income, they may become responsible for paying debts from which their disability income was protected. So, people with disabilities who have a credit card are usually they only more likely to pay only the minimum balance or make late payments, and they're more likely to feel burdened by debt and have been contacted by a debt collector. So So they may also have debt resulting from like overspending or failing to keep up with their bills, or poor impulse control, difficulty with communication, planning, decision making. And some people, as I said before, they may have specific cognitive limitations that impact their ability to manage their finances. So all of this can make them make them be more in debt. And unmanaged debt can also arise just due to a person's life circumstances, not necessarily a disability. For example, they may, a person might take an education loan, but they might never finish their schooling. So once they start working again, they may be liable for their student debt if they don't have the qualifications. And they could also have medical debt related to treatment. Their credit scores could be damaged due to like overspending or other things. And so all of these all of these issues surrounding debt can be a barrier for people wanting to be employed, because it just might be like too much for them to handle and too much for them to think about. So this just summarizes what I've covered so far. So basically, this is a pathway through which financial challenges may affect employment outcomes. So we here that you take the case of only receiving benefits and not working. So the person considers whether to work, and then they fear all of these things. So they fear losing their income-based subsidies, fear facing tax difficulties, fear incurring new debts, overpayment, losing payee support, and becoming liable for past debts. So someone who is considering whether to work and then they fear all these things. So a consequence could be that they decide not to look for work, or despite interest or deciding to work, they might choose to do lesser hours so that they can still retain their benefits and not have to face all these fears. And then on this side, you have someone who gets a job and starts working, but then they lose their subsidies. They have difficulties with tax obligations. They might incur new debt. They have to repay their overpayment. They may start being contacted by debt collectors. They may lose the payee support, and that can result in, either bumping down their hours to work less hours, or just stop working because of all these difficulties that they may be facing. So, what can we do? How do we improve support for people returning to work? So, people whose disability prevents them from working, they should be given adequate financial resources to lead lives that are fulfilling. And however, employment is, of course, a vital component of people's lives. And we have the individual placement and support, the IPS model, which helps people with serious mental illness find and keep employment. But a lot of people with psychiatric disabilities, they don't have access to IPS, and the quality of IPS also varies a lot. And mental health care providers' beliefs and attitudes about their clients' ability to work also limits their capacity to access IPS. And even if they have access to IPS, they may not always work full time. They may not be entirely independent, and they might not work as many hours as they want to. And IPS also doesn't address some of these financial difficulties that we talked about. So it's important to have an integrated approach which takes into consideration all of these financial difficulties while also trying to promote an individual's mental health. So, also considering work outcomes like health related work functioning, work limitations, work instability, and work capabilities before finding employment for the person. And accessing benefit counseling for people that will inform them of how their employment income is going to affect their benefits and the SSA, and encourage people to return to work and provide other supports. And fostering an inclusive and supportive workplace culture where the person feels comfortable discussing some of these issues, and also having different incentives or accommodations to provide supportive resources for people with psychiatric disabilities who are trying to work. So in terms of specific recommendations, one of them would be maybe having, with involving people with psychiatric disabilities in the process, but developing and testing like toolkits or training guides that are aimed at benefits counselors and service providers to help them discuss financial issues with their clients and provide some sort of guidance on how they can address these difficulties beyond just losing their benefits. So, losing their benefits is one aspect of it, but it's also like, what else can we do to address some of these other financial challenges? There are some places that offer like one on one financial counseling or coaching to people who are struggling to help them like manage their debt, make a budget, open a bank account, increasing their savings and stuff. But I think for people with serious mental illness, you need more sustained and goal-oriented support to really help them deal with the different challenges that they face along the way. So it's not just like a one-time, I'm going to do financial counseling, this is what you need to do, but more of like a ongoing, continuous support that someone can provide and a detailed understanding of like what are some things that they might experience in this process. And current financial management support options, they are not exactly helpful for people who struggle with their finances. So you need to have more research or more programs that offer this comprehensive support and different decision-making options than what is currently available. And also in the, earlier I mentioned the volunteer tax filing thing. So for people, they of course don't have specific training on how to work with people with psychiatric disabilities. And so having these materials to train them on how to work with them and, teaching them to do like outreach or provide guidance to individuals who have disability benefits and employment income and how can you kind of manage those things. And more like a policy level changes to the financial services industry to provide, to cater more to people with psychiatric disabilities, to allow for more like comprehensive financial decision making, as well as more effective and independent financial management. So having, certain alerts like on if you have like a banking app, having alerts for them when they're like overspending or having like overdraft free banking so they don't have to pay all the fees associated with like overdraft, or having tools where people can select like do a double confirmation, especially if they're doing like larger purchases, or setting certain like limits on purchase amounts, or blocking like purchases at certain times. But there's definitely like things that can be done in the financial industry, larger industry, to help people with disabilities manage some of the barriers to employment. And that's all I have for today. Thank you. Yes. Yeah. Mm-hmm. Yeah, yeah. I mean, that because those limits are not indexed to inflation either. They've been the same for many, many years, and so yes, that would definitely be a consideration to increase those limits. Yeah. Yes.
Just a comment. We talked about VR, and, vocational rehabilitation being like the best kept secret. Well, I can't speak for all states, but we have benefits counseling, and anybody with a serious disability or would have a substantial impediment to employment and is eligible for that for no cost to themselves. And also, once they have found employment, at a minimum, that VR office will follow that person for 3 months. Can help with some of those things. Refer them to employment networks that can then follow up for a long period of time or as long as they want with that financial support.
Mm-hmm. Yeah.
So I think with people, maybe just specifically mentioning that so people are aware of, what agencies or what organizations.
Yeah. But I also feel like sometimes people are reluctant to discuss their financial issues because it's so sensitive. So I guess just encouraging people to discuss that with their benefits counselor when they have that available. Yeah.
Good afternoon, and thank you very much. And thanks for the comments. I'm curious, when I've tried to address this issue in Pennsylvania, one thing, especially I do research related to HIV and employment, and there's this considering work model that just applies the phases of change. And so the first phase is considering whether it's feasible to work or not. And what I have found is that it's extremely difficult to get any benefits counseling unless you've actually been offered a job. So to get benefits counseling when people are just trying to determine, does that reflect your reality?
I'm with Nebraska VR, and with our intake process, we figure out who has benefits and who doesn't. And right up front, before we even do our eligibility, we're starting our benefits counseling because a lot of times they're not even sure if they want to go to work. They're not sure if they want to apply because VR is all about work. And so I'd say it's been at least 10 years, if not more, that we have brought in benefits counseling. Decades ago, we didn't have it, and what would happen is they'd find the job and then they'd quit, exactly like she was saying, because they didn't understand, they weren't ready. And our benefits counseling, in addition to SSI and SSDI, also talks about the food stamps and the housing and all those things that come into play. And I do think it's been helpful.
So in Pennsylvania, we also have benefits counseling, and it's just so another point of clarification. But for someone to get that benefits counseling through Nebraska VR, they have to apply to OVR, they have to be found eligible. Is that correct?
Kind of different categories to kind of do that. We have benefits orientation, which is a lot of times the VR specialist or the VR counselor provides a basic information, enough for them to decide. And then we actually contract out with like Easter Seals and our employment network to take it further and talk about past plans and those types of things. We're even doing a little bit with our pre-eds program orientation. So kids before they even graduate high school can start thinking about what they want to do.
Virginia Commonwealth University has the national, what is it? Work Incentives Planning Technical Assistance Center. And the recommendation is to do benefits counseling prior to employment. And we have actually also seen research that says that if we have benefits counseling, particularly outside of serious mental illness, particularly for any individual who's transitioning who receives benefits from high school to employment, that benefits counseling comes first, because in that pre-process, what happens is you find out things not just about benefits counseling or about benefits and employment, but how many hours should you work? And one of the pressures that we're beginning to see is as the minimum wage rises and as people actually make more money, they're actually having to cut hours to stay below the asset limits, because we're not talking about, when we say people have to pay back, we're not talking about wealthy individuals who have, $5,000 saved. They're not allowed to save more than $2,000. And so the paid back becomes a huge burden on a person who's, already only working 20 hours, probably making minimum wage, really doesn't have any viable way to save. It becomes very challenging to balance all that, even with benefits counseling. And so there's still base systemic problems with the way Social Security has not indexed these limits to inflation. And the fact that, $2,000 in 1982 was enough to pay your rent, pay your bills, go grocery shopping, and have a little left over. Today, that's not even rent in most communities. And so the idea that that's the limit of what you can save is really very, very, very restricting. Even with an ABLE account, you really don't have the ability to build any kind of sustainable income or sustainable savings.
Hi, Peter Pike from Colorado. And there's a couple pieces that I'm wondering about. Like, typically, when we talk about benefits counseling, it's always associated around SSI, SSDI, and that's very important. At the same time, there's a much larger population that might also be using state and local benefits, right? It could be supplemental nutrition assistance programs, health insurance, housing, all those sorts of things. So when you're a certified benefits planner, you get trained in those federal programs. I think an important piece for us also to consider is state and local benefits planning training, because even if a person is on SSI or SSDI, typically they're also going to be on state and local benefits. And part of that is sort of the full picture, right? In looking at that. So that's an element I would love us also to consider. And, it is tricky trying to access benefits planning services, because although Social Security Administration funds the work incentives planning and assistance sites, why would someone become a benefits planner if they can't get paid to do it? So sometimes agencies will fund positions to do it, but there's still a lack of payer sources for that particular service. So we can agree that it's important. There are some additional pieces hopefully we can consider so that we can expand the availability of those services. Thanks.
I just getting back to my challenge is that, and I think it's broader than HIV. It's really anybody, even people with psychiatric disability with an intermittent health condition, because if you can't be found eligible for VR, then that's not a, a pathway to benefit services. And it seems like the other pathways are very limited. And there's a lot of cuts to those funds as well. And it's so discouraging because when we talk about our field and what we want to achieve, I remember this is going back more than 30 years. But I was so shocked because when I went on my internship, I didn't even learn about this in school. So I go on my internship and I'm all like so excited to help people get a job. And they start telling me these things. And I'm like, oh my goodness, how could I can't even in good faith recommend that you put yourself in this kind of risk. Um, and it is so complicated that even people who get the training don't really feel that confident. So it's like a third rail. Nobody wants to deal with it. It makes it, when I go into different health systems and try to encourage employment, nobody wants to deal with it. And a lot of it isn't that they're biased against people with HIV. A lot of it comes down to these systemic issues. And then the idea that people with disabilities should be condemned to lives in poverty is really what this whole system supports. And it's devastating, outrageous, and we hardly ever hear any protest or any movement to change the needle on this. And it's just vile.
Neon just they did a presentation a couple couple weeks ago. You can get the recording. It was like just right on point. There is a little bit of like invigoration. They are talking about, the idea of moving people out of poverty, and it was like very encouraging and advocating. And they, it was kind of some general ideas, the same things we keep saying about how to improve, but I think there's some hopefulness in that too. But I would check that out just because it was like, oh yeah, I forgot. We want people to like have these good lives, and they need money to do that. And so, they talk a lot about being person centered, and then leveraging these underutilized tools to make sure you can get the things you want and need, and be encouraged to do that through employment, and have employment not be a disincentive. So I would check that out too. It's just really cool. Through It was through NEON, like NEON, National Employment Opportunity Network. So it was the cost, oh my gosh, return on investment, something like that, for the cost case for benefits planning. So it was really nice.
So there's another sort of consideration I'd like to put out there. And you mentioned in your presentation that, people are applying for these Social Security disability benefits, right? And they're told to get out of the workforce. There is an inaccurate messaging that people have learned for years and decades around applying for SSI, SSDI. And that is, you can't be working when you're applying for those programs. That is actually not accurate. And so we're setting people up who are applying for those programs to live a life of poverty because they're waiting a year, maybe 5 years to get on those programs. Only 30% of people get approved on the initial application. And so in the meantime, they're not working and they have no income. And I think looking at the messaging around applying for SSI, SSDI, encouraging employment, staying in the workforce at the same time can help shift the direction a little bit in terms of people following this pathway into poverty. And that's a important area that we're looking at in Colorado and something for consideration.